The question on the minds of crypto traders and investors is, when are alt seasons finally going to happen? When is alt season finally going to happen? When are altcoins finally going to move? When will the boredom end? Or is it all over for dead altcoins from previous cycles? Well, Arthur Hayes has some very specific ideas we're going to discuss today about when alt season might come and exactly what's going to fuel it. And then I'm going to discuss that with Dan Gunsberg, one of my favorite guests. We're going to dig into that. Everything else happening in crypto, of course, the arch public guys on the back half. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Streets. Before we get started, please subscribe and hit that like button. Alt season, is it a myth? It's like the movie Waterworld. Dry land is not a myth. Alt season, it's a myth at this point. But he finds dry land at the end. Will we find alt season, much like Kevin Costner in Waterworld? Don't know what I'm talking about right now. Maybe it's because I'm in a water world at the moment. Dan, is alt season a myth? Will it ever happen again?
Is it over? Complete aberration. It's been an aberration for God, since when? Since 2022.
Yeah, I mean, when we're supposed to have this 4-year cycle, it's supposed to be amazing. But if you actually look at the 4-year cycle, alts should be exactly where they are, in my opinion.
Fair. You know, I think a couple of things. One, the more that you start to see traditional players in this market, you know, things are going to move a little more lockstep, where you have crypto assets, which kind of has always been, you know, at the far end of the spectrum of risk assets, and then you're going to have alts like beyond that one. And so as risk assets really start to come back in vogue, you'll probably see more and more capital pushing into alts. I think the other thing is fucking meme coins, man.
They've wrecked everything. It's over. I hate them. No, I'm just kidding. But they've really taken all of the interest out of what would have been the new token launches and kind of sucked it into the Solana ecosystem.
That's just it. It's, you know, are we in it for the tech? Is still remains to be seen. I know I am. I've been building for long enough that if I wasn't, you'd think I was crazy. But yeah,
you are literally in it for the tech. But you're building on Solana. I mean, it's worth talking about, right? So all of this Solana ecosystem explosion has to, in some way, accrue to interest in everything you're building when you're building the underlying plumbing for a lot of this.
It sure does, but you know, the Solana money in the Solana ecosystem is very hot. Number one, and two, again, meme coins. Like, there's been such a push. Look, there's been, like, I'll take something like Bonk as an example, which I love. Like, the Bonk ecosystem is, it is probably my favorite ecosystem outside of anything Hxro related, and it really, in my opinion, somewhat saved Solana at a very dark time for Solana. It also spawned a meme coin revolution in Solana of something that I've never seen before. So that's the only downside. Everything, you know, I would say there's 100 bullet points on it. 99 of them are positive, and the one thing that it spawned such a craze. I think that into things like Whiff and then Pump.fun just degenerated.
Everybody can create that. You can just create your own meme coin.
Yeah, I just saw a stat. I don't even know if it's true or not. I mean, it's on Twitter, so it must be true, right? That was it. 1.4% of coins that get created on Pump.fun actually bond, and then maybe it was like 0.04% actually like maybe get over $1 million market cap, and like, I mean, basically, it sounds like 99% of people, you know, which is like from a Pareto principle standpoint, is probably pretty accurate. Like,
yeah,
you know, 1%.
Not quite 80-20, but 1%.
It's not quite 80-20, but it's
especially
it's
some like who's going to
1%.
buy some random dude's coin that he decided to make last night while he was drunk.
Exactly, or it's like the 3,000th coin that he's made, you know, sitting up in his 2-bedroom in Dubai. Who knows?
Yeah, totally. Okay, so let's talk about what Arthur Hayes had to say, because it's kind of the title here, and I think it plays actually pretty well into what we're talking about. Bitcoin and Ethereum rally kicked off a sexy shitcoin soiree. The guy has such a way with words. Ahead of election, Arthur Hayes. If you guys have about 17 hours and a Merriam-Webster dictionary, you can read his entire piece here. It does eventually get to crypto at the end. His long form takes long form to another level, but I think we all probably read it. But the core idea here is we're in a period of fiscal dominance. What does he call her? Bad girl Yellen. Janet Yellen matters a hell of a lot more than the Fed. And inevitably coming into election, we're going to see the liquidity cycle of all liquidity cycles in October. And that is going to lead us into this shitcoin soiree. Interestingly, that's exactly what should happen in the 4-year cycle, even without that, right? You have the halving in March or April or May, and you wait 6 months, and the summer's terrible, and everybody says it's dead, and then parabolic everything.
I mean, it's like the 2021 Fractal, right? We had the initial move into Ethereum alts and what they called the DeFi 1.0 at the time, and then things petered out for the summer, and then maybe it was like October, November of maybe 2020, and
October 1st. I think it was literally October 1st. I seem to remember that everyone was joking about October, and the minute October hit, it was like Bitcoin went up 5-6% the first day or something, and everything followed.
Yep. One thing I like that he said in here was this cycle, and I'd like to see it for many reasons with DeFi of getting into an alt season, and then he was saying that he was going to take capital off the table, should this hit, and he was saying to move it, he was going to move it into USDE, but moving things into yield bearing assets in DeFi, I think, is something that I'd like to see more and more of. And more convergence with kind of the traditional world moving assets there. I think over the years it'll get easier and easier to price the protocol risk of being in these protocols. And obviously you have major hack risk, you have lots of technology risk in it. But when you eventually have yields going down, you're gonna have you're gonna need to find places to put that cash. And so far under the risk curve makes a lot of sense, into altcoins, eventually out of altcoins into yield bearing assets, where when you're in DeFi, you're at least going to be getting well above treasuries plus the rate that you're going to get for accepting protocol risk, which could be pretty good.
But for him, Ethena, I mean, he is Ethena, right? I mean, he's like their lead advisor, right. Huge investor. So that was kind of a soft shill for his own protocol, which obviously we know carries some risk. But the overarching idea there, I think, is the one as well worth discussing, which is effectively, which lines with our cycle that we've had every 4 years, is that summer ends. He says September, very specifically. He thinks it launches. That's what I've kind of been saying since March. And then he's out in October. And then when we get the debt ceiling raised in January or February, he's back in. He has a very specific plan here, which is great. But does that mean you can throw in darling altcoin that somewhat died from previous cycle named Matic? Does that mean we can buy Matic in September and October and see it pull 100x or a 10x? By the end of the election, or do we have to look at the new big shiny things?
It seems like the attitude is to always be looking at the new big shiny things. I definitely see it in the Solana ecosystem. That hot ball, and I guess it does happen in all of them. Like, it's just a hot ball of money that chases from one to the next. It should. These things at the end of the day, these protocols, when you're looking at it from that perspective, coins seem to be like widgets, right? It's like, where are you going to get the biggest bang for the buck? They're all going to kind of move in tandem. Things are so intertwined with spot markets and swaps and whatnot, that if alts are moving, and anything that's crossed up with something else is going to move with it, and a lot of I think most of the capital is just, it's that hot ball of money moving through, and you have a lot of opportunistic traders. It makes sense that that's the way it's going to work. So
the only problem I have, it's a hot ball of money. It's trading memes, obviously, but even if that hot ball of money moves to altcoins, we're still going to have 200, maybe 2,000 new tokens that people have been investing in for the last 3 years starting to unlock, because nobody wanted to launch their tokens. And we're going to still have the late unlocks from some of the big protocols from last. I guess my question is, even if the hot ball of money moves, can we get, because of this liquidity he's talking about, can we get this new retail FOMO? Like last cycle, it took Doge going wild to get money going into crypto and NFTs.
Yeah.
Right? So, like, how do we get, I guess, the new retail FOMO to come in so it's not just the same money?
That's a great question. And I ask myself that every day. And, I don't see it being, as popular as it is. I don't see it coming from things like pump.fun.
Yeah.
If you take a step outside the crypto world and go talk to your friends who are in other businesses, they're still trying to ask themselves whether or not Bitcoin's for criminals. So, to get them to do things, you need to give them. Here, this is a good segue, actually. Let's take something like, and maybe this is a small plug, but something like Golfin app that you're familiar with, like
Dolphin. Yeah.
Yeah. So this is something that very much has crypto rails. It uses things like NFTs. It eventually will work through its partner Axiom Foundation, some form of rewards, points and tokens and whatnot. And when you're using that app, pretty much everybody that's using it, that is like a regular golfer, they're not even going to know they're using crypto.
No idea.
And so I think that you're going to, which this could be a big net positive. I'd love to see this at the consumer layer, like really an obfuscation of the complexities of the plumbing in crypto. And can you make that UX comparable, if not better in some ways, than what you get in traditional Web 2? And if we could do that, I think we're going to have a chance of getting people invested. You have suddenly somebody through a play to earn app is being rewarded with some token, and that token is on Coinbase, let's say, one day, and that's kind of the go-to for everybody, and at least in the US for that matter. And now they're in crypto, and I think that has to happen. I think we're at that point where that has to start happening, because again, like when I talk to people that are outside of crypto, they'll hear about they're gonna hear about Bitcoin again when it's at 90,000, and the broker's calling them about the new ETF at Morgan Stanley. Like they're otherwise, like I will be very interested to see if you're going to get that same like post Doge rush
Yeah.
And maybe it'll happen, and it doesn't exist yet. Who knows? But I do want to see something that where we can really start converging through consumer applications that make it a competitive UX to Web 2. And I think
How about
push it.
yeah, I mean, listen, you came in, Hxro sort of started as gambling, right? You had
and you know, and it really, that's what it does now. It's all plumbing for.
So I have to ask
iGaming.
about Polymarket. Yeah, right. So let's ask. So Polymarket is this? A lot of people are saying, hey, it's just a betting app. Betting obviously on effectively anything. But is it just happens to use crypto, or is this something that could lead to actual crypto adoption? I mean, there was 5 million on what Trump would say during his X speech with Elon Musk. I mean, you can see specifically that there was betting on what he would say and different words that he would say. I mean, people literally bet hundreds of thousands of dollars on whether Trump would say tampon. Like real money. Real money. It's right there. I mean, tampon. There it is. $447,932.
Is that crypto? Is that people that are already in crypto, or is it like?
That's my question. Like, could Polymarket become something like it? Predictive markets could, because it's crypto native, could that become the big thing? And by the way, I mean, they didn't mention crypto in the speech, which was wildly disappointing for a lot of people because this conversation was supposed to happen in Bitcoin Nashville.
I mean, it already is, like, things like prediction markets, I think, will continue to persist. They persisted long before, like when we started Hxro, we have an early advisor to Hxro that, God, I forgot the name of his business, but they were using prediction markets for, like, big Fortune 500 companies were going in and like using prediction markets to help try to get crowdsource predictions from their employees about their own companies, like things like that. There's a lot of other use cases for it than purely degeneracy. But yeah, I mean, look, we were on it years ago. We were way ahead of the curve on it. There's no doubt about it. Polymarket came on a couple of years later, and they weathered a few storms. And the question to me will be whether things like prediction markets go back into hiding post-election. Obviously, election markets are like the biggest thing, right?
They nailed it. I was just going to say they were the benefit of incredible timing with the way this election has played out and the ability to bet on it in real time. It's just become a absolute.
But look at Polymarket it's been around for years, like.
And it started to gain traction with the betting on the spot ETFs approval, right? And then the elections just exploded it.
Right. I mean, remember Augur?
Yeah.
The problem with Augur was decentralized, and of course, when that happens, people are like suddenly doing assassination markets, and like that's not good. You don't want assassination markets on your platform. So,
is Polymarket? I haven't actually dug into it. So Polymarket, they set what the predictive markets are. You can't just put anything like Augur.
To the best of my knowledge, yes. It is not open source.
Listen, so is there anything else that's exciting you before I let you go? Like right now, obviously golf, we talked about that. I do know about that. I've played with it. That's going to be awesome. Like, so is it really gaming and these experiential things where we finally abstracted away the crypto side of it that's going to be the next boom?
I think things like that, golfing, there's something called Moonwalk Fitness. I don't know if you've seen that flying around a little bit.
Not.
Cool concept. Like this is like it's a little bit of a derivation from like the play to earn model. It's really Moonwalk is really about fitness accountability, and what they do is you have these like walking tournaments, almost like Steppen was, where maybe it's like 10,000 steps a day for 5 days, and you put a tournament together or a contest, and you have to bond yourself. And so maybe you put up, 1 Solana, and everybody in the contest puts up 1 Solana. So there's 100 people in the contest. Every day you don't complete your minimum step requirement, your bond gets slashed. And you lose that portion of your bond back to the pool, and then everybody who has completed the task every day will then get paid out from that. So it's a really cool concept, creates a lot of accountability. It's kind of like the next gen of like getting all excited and joining a gym and then putting it in your credit card and forgetting that you're wasting $150 a month, right? So things like that, golfing, we have turned our focus very heavily into the regulated iGaming sector. So crypto casino platforms, building plumbing towards that. We have a integration partner called BitBlocks. It's doing game content. We're doing a lot of stuff there. And so I think that's where you're going to see it. I think you're going to see all forms of that kind of push there. And I think that's where you're going to start to see a lot of movement in crypto.
Love it, man. Well, always love your perspective. Thank you for joining. And
Thanks for having me, man.
We just got to come back in fall and see if he's right or if we're right.
Yeah, I don't know what Arthur's record is, if, on his predictions, if he's.
I mean, he makes like oddly specific predictions based on time and numbers. By the way, he said Bitcoin had to be above 7,000 and ETH above 4,000 for it to happen. I should have asked that. So, those two things don't happen. We've gotten out and whatever, but he's got balls because he says exactly what he thinks is going to happen.
Hey man, it's markets. Who knows? You got to go into it with an open mind and be ready to move on a dime. So.
All right, brother. Speak to you soon, man. Thank you so much, everybody. Follow guidance down in the comments. Later, man.
Yeah.
All right. Now moving on to Arch Public, and you'll be excited because we have another trade on the $10,000 portfolio, and we're up to $13,012, up over 30% on the $10,000 portfolio, killing it. What happened?
Yeah, it's
how'd we do it? I feel like I did it. It was I worked on it.
It's exciting stuff, man. We got some feedback from customers, and probably the best piece of feedback we got. We put all these on our site, by the way. I got a text that said, "Man, you guys are just killing it. It's just incredible the way that the algorithm does its work. It's literally like having a hedge fund. It's almost better than a hedge fund." And not adding additional commentary as to why it feels better than a hedge fund. And it's really because of that liquidity. But it is, we were up additional, a little more than 2% last Friday. A trade was taken. And again, it's the pace and speed and the accuracy that these trades happen that really get our customers and our clients pumped up. Because they see it happen, they watch, and they realize that, again, there's just no way that on their own they could do this. A trade in the gateway that happened at 9:28, and not to give away too much secret sauce, but the candles leading up to the open, the 5 or so minutes that lead up to the open, are much, much tighter than obviously the opening candle. So the trade happened 2 minutes before the open. And for people that don't know, futures trade about 6 days a week. There's about a 24-hour period where they don't trade on the weekend. So they're open almost all the time. And so 9:28 jumped into a trade and was out of the trade in about 39-40 minutes. So very, very quick, happened very, very quickly, and added again to the total of the model portfolio that we're talking about here. So it's just, it's fun. It's fun to take the ride with customers. It's fun to take the ride with you. Over the last 4 months, there's been a significant delta difference between broader traditional financial markets and our gateway algorithm. So, if we're right at about in the past 30 days, if we're right at about 20%, in the past 30 days on the S&P, you're up about 2%. On the Dow, you're actually down about 30 basis points or 0.3%. And on the NASDAQ, again, it's up about 2% over that 90-day period. So, 18% difference, while at the same time sitting out, significant volatile moments in the markets overall. So, People are very, very happy. People are ecstatic. People are looking at other ways that they can get involved with us and add additional algos to the work that they do with us. But the proof is in the pudding, right? The proof is in the performance. So the difference between what traditional markets are doing and what people are generally invested in, that matters. And I know on this channel, people are generally crypto native. And so, in the first month or two of talking to us, a 2% or a 5% or even a 12% back at the end of May doesn't necessarily light people on fire. But when you put a 90 days together of 20% or 4 months of 30%, that begins to get people's attention. And you're like, well, wait a minute, there hasn't been a meaningful downturn in that 20 or 30% number over 3 or 4 months. There's stop loss protection on 80% of our algorithms. Okay, I need to be paying more attention. And so the amount of incoming and inbound that we're getting is pretty significant. And we love what we do.
More importantly, do you think we're going to get a shitcoin soiree, as Arthur Hayes said in the fall? Shitcoin soiree.
I mean, Arthur is a pretty sharp guy, right? I think the fall is going to be associated with who wins the election. If we get a Trump regime, I would probably put money down on a quote unquote shitcoin soiree. I could see a movement. Yeah,
sexy shitcoin soiree. Actually, it's alliterative.
Yeah, those two words don't go together, shitcoin and soiree. But I could see a move up and to the right, but I think it would be fairly short-lived, to be honest. Those predictions, sometimes they come true, but they often are a little less pronounced than we would hope, right? Oftentimes, movements in the markets that are really significant, nobody at times really predicted. It's very rare that somebody predicts, or there's mass predictions that come true. It's just very rare. So who knows what the possibilities or outcomes would be with a Trump victory, but we'll see. It's frankly it's a 50-50 type of proposition right now, no matter who you're rooting for in the presidential election. Yeah, so there we are. VRTpublic.com.
First of all, I was going to give you a segue. I was going to say I have my money on a sexy shitcoin soiree, but if you want to avoid sexy shitcoin coins, you just make steady money and gains, and then dollar cost average right back into Bitcoin at the end with the Bitcoin algorithm coming.
Yeah.
Now you can do
it. Our Bitcoin algorithm is coming at the end of this week. We announced that it will be ready on August 15th. It's actually ready right now. And people that get involved with us at some of our higher tiers are going to get that product, quote unquote, for free. It's going to be a really, 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 really cool product with some intelligent features to it. That are going to allow people to stack Bitcoin in a very, very aggressive way at lower prices than most people do, and really allow you to dial in how you build your Bitcoin base and your Bitcoin stack. And as we know, that's been a pretty good way of building wealth over the past 3, 5, 7, 10 years. And so we like where that's headed, and we're going to be shouting that particular product from the mountaintops, not only here on your show, but everywhere we can find. And we hope that here in the next 48 to 72 hours, we can announce who we're going to be doing it with. And excited about it.
Wow.
I know. Paperwork. We're just waiting on paperwork. You know how that works. It takes a minute.
I might have some ideas, but guys, I know it was a shorter show. As you know, I'm remote, and just decided this morning this is gonna be my last show of the week. Take the rest of the week off. It's time because I'm coming back Monday hard, and I'm launching something new myself that I've talked to Andrew about. Which whatever, I'm gonna work on that and see all of you guys on Monday. But thank you, Andrew. Thank you, everybody. We will see you soon.
Have a good one. Enjoy, man.
Let's go.